Investors and traders, welcome to the channel Market Chart Pattern. Today is 26th of July 2024. Hope everyone is having a great day. We will be taking a look at the key US markets in this video. As always, this video is for educational purposes only and it is not a financial advice. So this one is going to be a little bit of shorter video. I wanted to cover mostly the dollar and the bonds and a little bit about the stock indices because we were expecting a key timing to come in today, which actually did. So we'll have a quick review of that, and over the weekend it'll be a little bit of a longer video, and I will also try to take a look at some of the sectors, because the rotation we are witnessing, the money is moving out of a certain kind of sectors and stocks and moving into certain sectors and stocks. So it's always interesting to see how it is moving. So this is our chart. This is a daily chart of Dow Jones Industrial Cash Index. This is a timing model that we have been following, and the long-time subscribers will know that this model has forecasted some really key turning points with an uncanny ability, and we had a date coming in today, 26th of July, followed by another one on 29th of July. So the timing coming today, and we were also looking for at least a bounce in the markets, the NASDAQ 100, SP 500, and this is what we got today. Some of the indices were much stronger. For example, the Dow Jones Industrial Index, this is the cash market, it closed up 1.64%, or 654 points. It closed in the positive. So that's after having a fair amount of pullback in the Dow Jones and much more in NASDAQ, which is about 10%. It was a nice thing to see, indices closing in the positive. So that's great. And now we have the big one, big timing coming in, and that time frame is actually around 29th of August to 3rd of September. So this is, since it's a key date, so what I'm going to do is move it over here and type this. 1st of July was, 1st of July to 4th to 5th of July was the kind of window we were watching for a key date, which we did get. So let's type this. We are looking at 29th of August to 3rd of September, and as always, with the timing, we give it about 2 to 3 trading days either side, especially for the big time windows. So this is what we'll be watching for, and we'll see what the timing will bring for us. Let's have a quick look at the finwiz.com. Just wanted to show you the different indices and how they perform. These are the cash indices here. So Dow Jones up 654 points, 1.64%. NASDAQ was also up by 1%, 176 points. And this is the one which had actually been, corrected a lot. This one, S&P 500, also up by 1.11%, or nearly 60 points. But look at Russell 2000. It was also up 6.5%, and in fact, Russell 2000 has been the best performance on the weekly basis, which we will review over the weekend. If we just have a quick look at the heat map around here, so in the technology sector, kind of the opposite what we saw yesterday, when we had a lot of selling. So Microsoft up by 1.64%, Nvidia about 0.7%. Apple was also up, and in consumer cyclical, discretionary, Amazon up about 1.5%. Tesla a little bit flat. But look at the energy sector. The energy sector had done pretty good yesterday, but it's kind of flat today. And if we look at the communication services, Google did not perform that well, but still it has had a pullback from a key pattern that we had been watching. So we'll discuss more about that in another video. Okay, now getting back to the charts, here we go. I will do a really quick chart by looking at some of these key indices. So we'll just start by taking a look at the daily chart of NASDAQ 100 futures, and here we go. So what we have seen this past week is the market has pulled back about 10%. And we have this one-to-one price projection ABCD in brown, which actually came a little bit lower. But the key important thing is that yesterday, when the market made a low around 18,883, that low came between its -1 and -2 standard deviation. I was actually pretty close to its -2 standard deviation level. So that's an interesting thing. And today we were expecting at least a bounce, and this is what we have seen. It's an inside bar. There's a lot of technical deterioration in the price which took place, and the market went right to the 89 period moving average. So of course it's going to take some time, some consolidation, where the bulls might begin to slowly but surely come in and pile into it, and we could be seeing an interesting turnaround in this. And of course we have another key date coming next Monday, so we'll wait and see what Monday will bring us. But the index on the future basis has been down roughly about 10%. That's the biggest pullback that we have seen since going back to October of 2023, and certainly this is the biggest one for 2024, because the one which we saw in April was about 8.61%, and this one exceeded by about 1.5 percentage points. Okay, so this is what we are looking at in the NASDAQ 100. Now let's take a look at the ES. So that's the S&P 500 futures, and this is the daily chart. So this is what we were showing yesterday. This actually has also had a pullback of about 5%, a little over 5%, but this is not the biggest pullback it has had, because in April we had about 7% pullback in this market in 2024. So the other thing is that from a technical perspective, the market went right to the 38.2% Fibonacci retracement of the lows of 19th of April to the recent highs around here, and then it did it in an ABCD fashion and right at the -1 standard deviation level. And because of this, we were watching for a confluence of number of things coming together, and this is why, along with the NASDAQ 100 futures, we were looking for at least a bounce, and this is what we have got today. It's an inside bar formation. And the other thing is that this blue trend line that you see, if we join the lows of October 2023 and the 19th of April lows, we have this nice trend line around here that was also providing a support. So we had a confluence of a number of things coming together. A longer term trend line, we have the 38.2% Fibonacci retracement, we have the ABCD pattern formation, and we were also at the -1 standard deviation level, and that was giving us the confidence to watch for a possible rally. And this is what we got, which might just be a bounce at this stage, but it could be more than a bounce, which is actually my hunch that actually we might have actually seen an important bottom coming into the marketplace. Again, getting above this 55.40 level is something which is going to give us more confidence, and ultimately we are looking for just to get into these gaps, and getting above these gaps is what we discussed yesterday. I'll put a link to that video in the description. If you haven't watched it, I suggest you actually watch it, and I will also put a link towards the end of this video as well, so you can watch it in the captions. And this is what we would like to see, and ultimately, ideally, the market being strong enough is able to actually push through. And of course we have got higher targets for S&P 500. Okay, so enough of the stock indices. Really quickly, just want to show you the YM. These are the futures contract for the Dow Jones index. This is a daily chart, and this is what we were looking at, 38.2% retracement, and this has been a pretty strong index. Remember back here when the NASDAQ and the S&P 500 were really strong, going into March and April, and going into this high in May. It's kind of the opposite now. The Dow Jones is much stronger, and so is the Russell 2000. So what it is telling us is basically the market is going through a rotational aspect where certain sectors and stocks are being sold and the money is moving into certain stocks and sectors. Okay, now let's take a look at the dollar by taking a look at the dollar index. So this is the daily chart of the dollar index. We believe, this is our opinion, and of course we believe more in the technicals than in the opinion, that 107 level around here is a pretty important top for the dollar. And here we have seen a top, a double top, and here a top, double top, and with respect to these two tops is also double top formation. And we are actually moving in this black ABCD one-to-one price projection down into this box here. This is what we're looking at. But the market had actually last week found support from the 7th of June lows, and it just retraced right back into 38.2% retracement. This is where, in my opinion, it's just sideways action, pretty messy kind of sideways price action, the kind of price action that I personally do not like to see, but this is what we are getting. But it's really at the resistance as well, and look, the chances are the dollar is likely to resume its downtrend, which should actually also be good for precious metals such as gold and silver, which have also taken a bit of a beating, silver being a little bit down. Now, on the flip side, this could potentially be a good support, the 7th of June. So the other scenario putting out there is that maybe it's able to find support and take out 107. Unlikely scenario, in my opinion. But as an alternative, it exists. Okay. Now, ultimately, I think, in my opinion, we're going to see really accelerated weakness in the dollar to come in only if we are able to break below the 99 level, which comes around here, because this has been a very important support right at the 61.8% Fibonacci retracement. So that needs to break convincingly. Then we could have a much bigger pattern ABC to the downside. But what we have seen throughout 2024 and also the second half of 2023 is actually a big range in the dollar. And one of the reasons from a fundamental perspective, in my opinion, has been the monetary policy is strict. In other words, the interest rates are higher. So this is what the Fed controls. The one of their tools is the interest rates. And so we have a monetary policy which is basically contracting in the sense that it is elevated interest rates, right? On the other hand, the fiscal policy, which could be basically lower taxes or spending, it has been pretty loose actually in the United States. So when we have this kind of combination where the monetary policy is strict and the fiscal policy is actually loose, then the value of the currency is likely to go up. This is coming from George Soros' book Alchemy of Finance, and this is what we have seen. We haven't seen actually a serious pullback or a sell-off take place in the US dollar till November last year, November 2023. And that's when the Federal Reserve kind of did its pivot and they started to actually talk about lowering interest rates. And then there were forecasts coming out, maybe 3 interest rates to be expected in 2024, maybe even 4. And we have thus far seen none. And when that kind of became obvious that Fed might not be able to do what they were saying because of the inflation data being harder than what was expected, and they wanted to see more evidence that inflation was actually cooling. This is where we saw a strength in the US dollar coming back again, and then the market went right to this to fill this gap, technically speaking, and then rhetoric began to change a little bit. The inflation data began to become more soft, and this is where we have seen more softness coming in the US dollar as well. Overall, it's a pretty big range, but it remains a range-bound market, but it has been following these patterns pretty nicely. All right, so now we'll take a look at the Treasury markets. We'll start by taking a look at the shorter end of the curve. This is 2-year Treasury note, and what we have been watching for is actually there has been a head and shoulder pattern, a pretty big one in this market, and also we have this big ABCD, which is this the one in black. Is the dominant one in my opinion, which is active, and we are in the CD like lower per my analysis, and we can actually see the yields as low as 3.9% on the 2-year Treasury note. We certainly seem to be going in that direction. We got that confirmation per my analysis when it broke below the 4.7% mark, and that was a pretty important support coming from the structure, also the 38.2% retracement of this BC swing in black, mentioned in black around here. So there we go, and here this is where I began to get a little bit concerned. The week, not this week which just went by, but the previous week, where we had a throwover coming in this market. And what is a throwover? Look at this trend line. It's been there for quite some time, since March of 2023. And what the market did was broke below it, and then it just went over it. So that's what I was talking about. But again, it has gone below that. So now the movement has started back in the CD leg. So in my opinion, the yields are likely to move lower based on this pattern CD for the 2-year Treasury note. Now, if we take a look at the 10-year Treasury note, here we go. Now this one is on the y-axis. We see prices. So the bonds are inversely. The yields move lower, so the price move higher. We are actually in this CD leg, blue line CD leg higher, in my opinion. We were moving nicely, but we have seen resistance coming from key levels such as the 61.8% retracement. A bigger one is just right above there, and of course the past couple of weeks it's just been consolidation here. We have had some pressure come in my opinion. That's because of related to Japanese yen. So the yen was really strong, getting really weak, so some intervention came in around the 11th of July from the Bank of Japan, and some of that might have spilled over into the treasury markets as well. I don't know for sure, but what we saw was basically sideways price action, and now it looks like the market wants to resume its uptrend in CD, which means lower interest rates. And over the weekend, last weekend, I've done a video in which we took a look at some of the sectors, and home builders had been doing quite well. That was pretty interesting one to watch with regards to the homes. Okay, now let's take a look at the longer term US Treasury bond, long bond futures. They are known as long bond because it's 30-year duration, which is really long. There's also an ultra bond as well, but the difference between a 30-year Treasury bond and the ultra bond is the duration of the securities which are inside it, but the actual expiries are for 30 years. One of them, I can't recall which one of them, has actually treasuries which are actually expiring quite soon. The other one has longer dated one, something like that. You can read more about it on the CME website, CBOT actually, Board of Trade. Now what we are actually looking at is CD leg higher, and which means interest rates moving lower, and we have been moving in this channel right here. So we got nice support coming around here, some pullback, consolidation around these moving averages level, and now in my opinion we're gonna go and challenge the highs of the channel around here. Ultimately we are moving in the CD leg higher. We can easily go till 132. And then we have the 38.2% retracement of this entire bear market come around 134. So it's going to be really interesting because there is possibly a chance that what we might be actually seeing here is an inverse head and shoulder here. So we need more time for it because there is just not that much enough symmetry here, but it could take several months before the market was able to actually take out this 38.2% retracement and take out this level around here, which means that there could be an argument that the bear market and the bonds might be actually over. So which is going to change a lot of things, a lot of things. All right. So this is what we have been watching in the key markets. We had the timing coming in the stock indices. We have seen a bounce, something which we expected and talked about in the yesterday's video. The dollar is right at the resistance level. It's just in a range bound market at the moment, with our bias to the downside for the US dollar. And the treasuries, they are moving in the expected CD legs, whether on the yield basis, yields are moving lower, shorter end of the curve, such as 2-year treasury note, and 10-year and 30-year long bond futures. The rates are also expected to fall as the price moves higher. So this is what we are watching. Thank you very much for watching the video. If you like our analysis and you like this video, you found it of educational value, please give it a thumbs up. And if you like our technical analysis, how we look at these markets using pattern recognition of Fibonacci ratios, mainly using price projections, expansion, and extensions, then please do subscribe to the channel. And I wish you good luck and good trading, and speak to you guys soon.